All right, yeah, thanks, Rich. Happy to be here. Brian Coffey. So a lot of what I spend my time doing is teaching our undergraduate classes. I teach a production economics class and I teach a futures and options trading class. And then the research portion of my work is generally looks at livestock economics, economics of meat demand, and risk management. So that's kind of how I spend my time. And today we're going to give just a few minutes to some big picture issues, looking at livestock and meat in the current situation and kind of looking out over the next year or so. And the goal here is just to mention some things that I think are important right now. We won't be able to go into detail into much of that, but give you something to think about. And then hopefully I will quit in time to take any questions and discussion that we have. So that's where we're headed. The title is Livestock and Meat Issues. As far as the livestock side goes, we're going to be almost entirely beef. I'll mention pork a little bit, but we'll be talking about beef and cattle almost exclusively there. And we're going to talk about the cow herd situation, capacity constraints out there, livestock and meat demand, touch on some political things, and then a little bit of outlook. So we'll start with the cow herd. And so this is kind of the big current story. Ongoing liquidation at a rapid rate, and everything that we see says that people are continuing that. So these are the July inventory numbers. NASS does a January 1 inventory and a July 1 inventory. So July is the kind of most recent one, and so that's the one we're looking at here. And so year over year from July of 21, we're down another 2.4%. Beef cows and heifers that have calved. And then I kind of indexed this back to 19. 18 was the high point. But anyway, indexing back to 19, 6 percentage points down from there. So again, you can kind of see how steep that downward portion of the line is relative to the last liquidation we had. So pretty rapid and ongoing. And it looks like it's going to continue right now. Conditions are not favorable for grass and hay and that kind of thing. So looks like we're still going to get a little bit smaller going forward. Can look at the other cow as USDA classifies them. So other means not dairy, so basically beef, but I go ahead and call them other because that's what USDA calls them. But beef cow slaughter at historic levels. So you got to go back to 2014 to see bigger numbers than this, but last weekly numbers, a couple weeks coming in there, over 80,000 head a week still being slaughtered. So way above 2021 numbers and way above the 5-year average there. Sorry. So anyway, all year this has persisted, and again, doesn't look like it's slowing down anytime soon. So getting smaller there. Another way to think about the herd size is what's happening to heifers. Are they going into the fed cattle and beef chain, or are they staying on feed somewhere? And heifer slaughter is still, again, way above 2021 levels, way above the 5-year average. So again, another signal that no slowing down there. As far as the supply and capacity, this continues to be a big topic, right? And you've got two ways to think about this. You've got physical capacity, which is just rail space. You know, are there hooks out there for cattle? And then you've got operational capacity. Can plants keep things going for 5 days or 5.5 days, whatever they need to do during the week to keep up? All right, and those are related, but not the same thing. So we want to think about that a little bit. Physical capacity, Daryl Peel at Oklahoma State's done a good job of kind of getting this message out there. We saw probably starting around 2015, kind of a shift there, going from excess physical capacity to not enough physical capacity for the fed cattle that people wanted to get harvested. Right, and so that changed pricing dynamics, changed market dynamics, and again, Daryl's got a lot of information out there about that. But that's been a dramatic change in the last few years. Changes the fed cattle market, right? If packers have to chase cattle, that's one thing. If there's not enough capacity to even slaughter the cattle that are out there, that's a different thing. right? So that's what we're looking at. So I think this is starting to correct a little bit with plants going offline and that kind of thing, and the herd getting smaller. So as far as on the cattle side of prices, I think we're getting some relief in both ways there. On the physical side of things, and this one's pretty hard to look into and actually say what's going to happen. A couple months ago, Cattle Facts estimated that there's enough proposals out there, kind of legit proposals of slaughter plants, that we could add 20 to 25,000 head per week of capacity. Now, the big question is, when is that going to happen? And I don't know. I'm not sure anybody does, because the problem is we've got proposals, and like I say, a lot are legit proposals, legit investors, but it just takes a lot of time. There's a lot of hurdles to get through for these plants to actually go online. But people are breaking ground, people are doing things are moving forward there. And again, as far as on the fed cattle side of things, if we see some of these plants come online and start to harvest, you know, substantial number of cattle, that could change the situation for cattle feeders pretty dramatically. And I just once again qualify there, a lot of these are still very early proposals. You know, some are big, some are small. There's all kinds out there. We'll see what comes to pass there, but there is interest in getting in the packing plant space there. The other thing here, and I think with increasing plants out there and new plants coming online, there's two categories to this, and I don't think in the media it always gets explained really well. So the first would be kind of this slide, and what I'm talking about here is kind of the more traditional, what we would think about larger plants, you know, that are going to own the cattle, slaughter the cattle, process the cattle, and then market the beef, right? So larger plants and that kind of thing. The other thing that's happening though is there's a continued interest in the smaller local processors, and I don't think these two entities are the same, right? The local processor a lot of times provides the service of processing. They're not in the business of selling their own meat and that kind of thing, but a lot of subsidization and energy going into helping some of these folks get started and supporting the ones that are already there. And so I think there's a lot of opportunity here for innovative cattle feeders, right, who want to kind of target direct to consumer or those kinds of markets or niche markets, right? I don't think these smaller plants are actually going to make a dent in the big picture, you know, capacity that we were talking about earlier. So I think it's an interesting opportunity. Consumers can get kind of beef that they want, maybe local or niche or whatever. Innovative producers can tap into that. So new markets are opening up, but it's a different subset, right? So I think we've got both these things going on at the same time. They're related, but not quite the same. All right. This is thinking about the physical capacity side. So I think, you know, if you look at the orange line there, that's 2020 federally inspected slaughter of all cattle. So that's everything, fed steers, heifers, bulls, cows, everything out there. And so we're basically right at the 5-year average. So I think that the capacity that's out there, we're doing a good job of using that right now. I think plants have chewed through the backlog of cattle that were there, carcass weights and other things. It looks like we're fairly current and doing a good job of using what's out there. All right. The other thing here we could look at is just the fed slaughter. So the way these numbers come out, the last 2 weeks on that orange line are estimates, and then a week later they get updated. 2 weeks later they'll get updated, finalized, and sliced up into categories. So I have to go back 2 weeks to get into those finer categories. But if you look at fed slaughter, again, above the 5-year average and above 2021 levels. So still harvesting a lot of cattle. I think using the capacity that's out there, a lot of good indications there. Things are happening. Transportation, supply chain. So supply chain, we've talked about over and over and over. Probably everybody's about ready to be finished talking about that. But transportation and trucking, that a lot of issues going on out there. I don't think the livestock sector has quite felt some of that as much as other sectors, but it's an issue, right? And so if you can't get cattle or meat where it needs to go, when it needs to be there, things break down. And so this is one of those wild cards that who knows when it's going to come up, but it seems like it's kind of making the rounds across other industries. Labor continues to be a perennial issue for meat packers. And this is one sometimes that doesn't get as much attention, I think, as others publicly, but finding the available and consistent labor, you know, to do your Monday to Friday, and then if you need to do a Saturday shift, finding that kind of labor continues to be a challenge. And as we know, to keep people working and to give people incentive in the current economy, wages are needing to bump up, right? So if meat packers are going to see increased cost here and increased, you know, supply interruptions maybe from inconsistent labor, that will be felt on down the line. And somebody mentioned earlier, we were so tired of talking about COVID-19, and I thought about rewriting this bullet point. But anyway, I left it the way it is. I think it's still an issue. I think the plants had to adapt and change the way they were doing their physical processing back in 2020. And I don't think it's possible to simply erase every one of those changes and go back to 2019, right? So I think some of those things that are in there are probably slow the process down a little bit, probably add a little bit of cost for the meat packers. And I think some of those changes are there to stay. There's ongoing legal stuff with COVID. You might see that in the news. Some of the bigger meat packers face it, still trying to settle lawsuits from that. So all of that creates a little bit of uncertainty. And again, anything that's slowing down the business or introducing a cost there at the meat packing stage, it has to get passed on, right? And it's probably going to get passed forward to consumers in higher prices a little bit, and some of it's going to get passed back to feeders in the form of lower prices. So those are still going on. These that I listed are not unique to beef. So all the proteins are facing these kind of challenges going forward. Exports. So this is, to me, one of the big bright spots when we're talking about U.S. beef. So this is a lot of numbers on one slide, especially right after lunch here at 1:30 in the afternoon. But big thing to look at here is 2021 was a record year for value of U.S. beef exports. So the biggest year we had, that is great news. And the big story, one of the big stories there is China. So if you go back there on the left side of my chart, the $30 million of exports to China in 2017, they would have been well out of this top 10 trading partner list back then. And actually, if you go back to the 2016 number on this, I spared you one column. I at least shaved it down to that many columns. If you go back to 2016, the number in the China column is a 4. So the growth of U.S. beef going to China has been phenomenal. And that is good news, because I think from my perspective, what we had was a big opportunity there with African swine fever going on and everything that happened with China pork. We had an opportunity to get in the door and become a part of habits there. And this indicates to me that, that we've done that. And so that's really good news, growing. To put this kind of in perspective of year over year, 7 out of the 10 of our top trading partners, we have grown in the January to June trade for this year compared to January, June of 21. Now, some of those numbers, like the Netherlands, is over 100% growth, so it more than doubled. Keep in mind, that started out as a fairly small number, so these percent, I don't want to mislead you with percentage changes, but still, they're a top 10 trading partner. Good news there. South Korea, Japan's slowing down a little bit, but still growth there. So all kinds of growth in exports. And I've got a note down there at the bottom. We grew over 30% in value. So we do have some higher prices now. Things are changing. But we also grew 8% in quantity over the same time period, 2021. So anyway, it's a great job, I think, of getting U.S. beef established in other countries, other places. Continues to grow. And this is really key, that this sort of demand is out there with the current high prices. This has a lot to do with what we're seeing in the fed cattle prices going up, right? That U.S. beef has these destinations. People in other countries want some of the cuts and actually value some of the cuts that U.S. consumers don't want. So it's a great situation to be able to tap into those markets. I just put up as kind of a comparison, pork is looking a little bleaker, right? So compared to last year, I've got the cell colored red there. Value of pork exports January to June this year compared to same period last year are down. All right, so down about 40%. Only one of the top 10 trading partners we've seen growth in that period. So a little bit of a different situation with pork. Beef, I think, export situation looks good and is definitely something that we want to keep working on and focus on. Domestically, economists talk a lot about beef demand, and so demand is not the same as just how much people consume, right? Demand takes into account the quantity and the price. It's basically how people view a product, right? So any product, if we make it more expensive, we expect people will buy less. If we make it cheaper, we expect people will buy more. But when we talk about demand, we're talking about fundamentally how they view it, right? How responsive they are, and that sort of thing. So Glenn Tonzer maintains a meat demand index on our Ag Manager website. I encourage you to follow that along. And so I just pulled a few numbers of that. So this is his index from choice retail beef. And basically what the demand index does is it says, okay, price of beef changed by a certain amount. How much would we expect quantity to have changed? If quantity, so for example, if price went up and quantity did not go down as much as we expected, that's great news. That means demand is increasing, right? People have changed the way they look at beef. And so anyway, we see a month-to-month positive number in the first column. That means the beef demand picture that month better than last month. And so you can see we're still seeing a lot of positive numbers month to month. There's some noise there, some negative numbers, positive numbers over last year, but we're starting to slow down. All right, so we'll see kind of what the picture is here. Still good news domestically. In my mind, it's not quite as good of news as abroad, but people still have this place for U.S. beef and looking better. So pork, I go ahead and put those numbers up there. They're actually quite similar, except for not as much growth relative to the past year. Okay, so export demand looking really good. Domestic demand has been quite strong, continues to be, but I think it's starting to cool off a little bit. All right, so a couple things here. Politically, it seems like in the current environment, there is a lot of attention on competition in the meatpacking industry. All right, so we hear this a lot, competitive environment, different phrases get thrown around. It's hard to say exactly what's going to change here. Sometimes it's hard to separate talking points from press conference, from action items, and what actually gets implemented. One of the things that's out there, I think that's moved a little bit farther down, is this idea of an inspector, right? With GIPSA and an inspector with some authority to mediate disputes. That one seems to be moving forward. I think it's moved past committee and should go to the Senate. That one, it could produce a little bit more confidence in feeders, cattle feeders, if they see, okay, I've got a problem. Now, as far as competitive issues go, maybe this gives them a little bit more confidence to pursue that. On the other hand, it's risk for the packer, right? So we'll see exactly what happens there, but a lot of uncertainty. And anytime you've got that uncertainty in the legal regulatory environment, some of these investments like I'm talking about earlier in new plants, those become a lot more uncertain, right? Because that's risk that you have to account for and you have to build in going forward. On the other side, so that's kind of the meat packing competition side. I think it's getting a lot of attention. We'll see exactly what happens there. There has also been a few efforts out there to sort of regulate, mandate, or change the way that the fed cattle are marketed. I think that this is cooling off a little bit, at least from what I hear. Higher prices tend to have that effect. But we'll see. One of the things that has been pushed out there is a USDA pilot program about the USDA pilot program for the cattle contracts library. And the idea here is that with formula pricing agreements, alternative marketing agreements, we don't know how cattle are being priced. So what this does, it says, okay, if you're going to engage in those kind of contractual pricing agreements, we have to make some form of that contract publicly available. So that's happening in a pilot program. USDA is working with industry stakeholders to sort out confidentiality concerns there, but that's coming. We'll see what kind of effect that has. As far as some of the other more stringent proposals, like mandating a certain level of cash negotiated price or that sort of thing, those haven't made that much progress yet. We'll see. Like I said, higher prices have a way to, tend to sort of put those on the back burner. In general, I just mentioned that any sort of mandate, anything that makes marketing options to cattle feeders more strict and less flexible, I would be very, very cautious of that, right? Because I think the people who are out there, it's their business and how they're producing and selling, and they know how to do that. And stepping into the market and mandating something, I would proceed with caution there. Food away from home is a big one, and for beef, of course. And again, 2021, rough time to be in the restaurant business. Those that survived, though, they got innovative, right? You've seen all kinds of stuff out there, right? No more menus, QR codes in a lot of places. You've seen takeout, restaurants overnight, their takeaway section would spring up. And so anyway, they got innovative and they survived. And I think the lessons that they've learned are going to be very important. There is, again, some good news as far as restaurants that sell kind of the steaks, some of the higher end beef, Open Table. So Open Table is a service out there that they monitor sit down and call ahead reservations for restaurants. So this would be not exactly white tablecloth restaurants, but sit down restaurants. And they're saying reservations are at 2019 levels, right? You throw out 2020, you don't want to compare to 2020, but we're back to 2019 levels, which is great news. And then foot traffic at steakhouses, this is Placer AI. And again, this is just kind of a tracking service and estimate, but foot tracking at steakhouses specifically higher than 2019. Ruth's Conglomerate and Texas Roadhouse Longhorns, they report great second quarter picture for this year, right? So all that to say, there's some positive things going on out there in the food away from home space. And keep in mind, that's all happening with the higher prices and inflation and a lot of uncertainty going on, right? So the fact that people are going out there and buying beef, buying steaks as food away from home in this environment, again, says something about the demand for quality U.S. beef. All right, so we'll end up here a couple of comments about prices. One thing we can do to look at sort of price in the future is we can look at a forward curve. And all this is I just picked today, it was last week, and I took weekly averages of all the fed cattle contracts. And so if we go out there to June, that's the June 23 fed cattle contract. The blue line is this year. And so that is at $150. So everything put together, everybody that's buying, selling the fed cattle contract tells us right now $150 is the price we're looking at in June. Futures markets are not perfect predictors. They tend to be about as good as other more sophisticated methods. All right. All that to say, there's optimism in the market. The seasonal dip for the Feb contract is there. It looks just like it did last year, but notice the wedge, over a $10 wedge between what we were looking at last year. So that's that optimism I'm talking about. Looking ahead, USDA ERS came out with their July predictions, and they are a little bit more optimistic, well, a little bit less optimistic than the board. They're not exactly the same. What they're reporting is an average of all grades fed steers in the 5 area. All right, but anyway, USD numbers there, you can see those going out into next year, looking at fed prices 150 or higher. So a better picture than we've had in quite a while. Feeder cattle, very much the same, same forward curve as last year. Some market optimism there, and the USDA numbers indicating that we're looking at some fairly high price feeder prices relative to the last few years. So optimism there. A couple things to wrap up on. The liquidation's ongoing. We've got the market optimism. Prices are better than they have been as far as feeder cattle and fed cattle go. I do realize that's offset with corn prices and other things that are going on. So that doesn't say anything about margins, but as far as absolute price level, good. The strong export demand for beef is extremely important, and I think that, you know, we can't overemphasize this. Looking for ways to continue to get U.S. beef in front of other markets and other places. All those efforts are great, and we want to keep that going. I think the meat prices and the livestock prices in the near future, we wouldn't expect to see a downturn there. So expect those to go on. And I think as far as big picture goes, the focus on consumer demand is the key. And I think you've seen some of the fruits of that effort, right? That we've got people who here in the steakhouse restaurants and at the retail level, they want the quality U.S. beef. We see the beef expanding in other markets. And with that kind of consumer demand, right, that's what's going to pull the cattle through the market. And so continuing to look at that, I think, is quite important. And with that, I'm going to stop. And I think we've got a question. Yeah, if you want to wait for the mic there.
You've covered supply and demand very well. Do you have any charts that reflect what the packers' margins are? My concern is with competition. We have how many major packers in this country, and comparing the margins that the cattle feeder is making and the cow calf man compared to the margins that the packers are making over a period of time. Have their margins increased? How much per head? Are they making $500 a head for packers or what? That's a real concern, I think.
So yeah, so I guess a couple of things that I would say about that. ERS, USDA Economic Research Service, does publish the margin, the retail margin, so the spread between boxed beef and live cattle. One thing to keep in, and I don't know that number off the top of my head, it has widened over the last couple of years, and then we're just starting to see it start to come back together. I would say one thing, when you talk about margins, especially that series, they don't tell you anything about profit, right? Because we don't know the cost and what the packer faces, the cost beyond the cost of the animal.
It's on the consumer. If the packers are making 3 times the amount of margin that they were making, I mean, it's all getting blamed on other things. We have enough packers, there's enough competition.
Well, I don't.
Cattle got to leave the feed yard because they're going to get fat and die, or they're going to die of heat. So I mean, we have to get them sold.
Right.
Get them out of here. We have packers that know how to control this.
Yeah, again, I don't know.
You have to answer the question, consumer, why they're having to pay so much for steak.
Yeah. Yeah, so several questions there. I don't know. Yeah, again, with the margins there and not always knowing what's built in there, not knowing the profitability, I am not comfortable predicting that adding or subtracting a packer is going to shrink that margin. Okay, I think that a lot of, like you said, it gets blamed, as you said, on a lot of things, but there are a lot of things going on, right? People want US beef, so that increased, so they're willing to pay more for it. So on one hand, we should see that those higher retail prices and wholesale prices is good news, right? Because at the end of the day, the only way they can sell at those prices is if somebody downstream is willing to pay it. So that
And it's inflation, we're increasing the price on the other end. If somebody in the middle is making too big of a profit, and, inflation, maybe a lack of competition or monopoly.
It's possible. I guess my
oil companies made record profits here in the second quarter. Price of gasoline was that high, but the oil companies, they should not have been making twice the profit they were making.
Yeah, well, I mean, yeah, definitely the oil's a little bit outside my scope here, but back to the beef. I think again, I'm not comfortable making a big pronouncement on competition just based on the margins. Yeah, so I understand what you're saying. There's a margin there. It's grown. But like we've showed, the quantity that people are willing to buy has held pretty firm. So that means people still want it at that price. So yeah, a lot going on there. Yeah.
I would just add, Brian, that I don't think the comparison between beef and oil is accurate because oil is more inelastic. You know, people have to have it a little more. Beef is actually elastic. And so you said they have to pay higher price. Well, they don't actually have to pay higher price, and there are substitutes for that. So I think his comments, it's demand that's driving a lot of this. I think.
Yeah,
it is that high demand.
And I would say another quick comment on the competition part. If there is profit there at that level and where the packer space, then we should see happen what is happening right now, which is new investment comes in, builds new plants and bids that down. So if we see new plants come online, then we can see kind of what happens there. That's to be seen, but good questions. Yeah.
Hey, Brian, my name is Dennis Schertz. Can you tell me what your analysis is of the cattle futures where the deferreds are premium to the front, bull markets are made with the front premium to the back? Can you tell me your analysis there?
The quick one, yeah, I don't know that I would have anything too profound. So yeah, the front, so you're saying here.
The front's behind. The front is discount to the deferreds.
Yeah.
So normally bull markets are made with front premium to the deferreds.
Yeah.
So what's your analysis of that? Which one's telling us the truth?
Well, I think the whole curve is, I don't know about if truth is the right word, but the whole curve is what the market wants. And so that curve says the market wants their fed cattle in October more than they want them in August. So if you're willing to take the risk and feed and hold those live cattle, fed cattle till October, we'll pay you for it. The market doesn't want their fed cattle in February. That's just a seasonal thing, right? So if you're going to feed those cattle and try to stretch them out to February, we're going to make you pay for it, right? So that's what I would say. I don't know if that gets at your question.
Quick question about these new packing plants.
Yeah.
Have you or anybody at K-State looked at the history of the establishment of new smaller packing plants, maybe owned by producers or some combination, and how they performed over the past?
Oh, as far as how they perform.
Well, do they survive? I think it's the only really.
Yeah. Off the top of my head, I don't know if somebody's looking. The problem is when you get out of that federally inspected size frame, then those plants are different. It's very hard, to get data on those plants. You got to go.
These small plants will be fairly expensive.
I would not say that. Don't quote me on that. But there's a minimum head size of processing that puts you into that federally inspected category. If you're outside of that, then the reporting requirements and everything are different. And so to get data from those plants and do research, you're basically going plant to plant. Yeah, I think that's one, and that's one of the things I think that is there. One proposed bill is trying to get changed, but yeah. Are we still good?
How will plant-based beef affect beef numbers, export numbers, and that whole scenario?
Yeah, so plant-based, it's ongoing, evolving. I don't have a, up or down answer. I think what we've seen, one of the surprising things, some research by folks at Purdue that just came out, buying those, and when I'm talking about plant-based here, I'm talking about the newer stuff like the Beyond, the Impossible, those kind of things, that a lot of people who are buying those are also buying beef. And so there's some complementarity there that isn't necessarily intuitive. So the people that are buying those are people that are already buying beef. I'm not exactly sure why. I mean, you can kind of think it through. Maybe, if you're trying to feed a group of people, if that plant-based stuff is available, then you could buy some of that, some of beef, and put it together. If that wasn't available, maybe you'd just move away from beef. So at the margins there, that's good news because they kind of go together. As far as plant-based, again, this is an up and down kind of thing. Q2 reports did not look good for some of the Beyond and the Impossible. So they fought, and they've got their patties there in the store at the meat counter, very comparable to ground beef prices. And so I think what we've seen is they've reached that level now where they're competitive on price, and we haven't seen a big move yet away from beef. So I know that's kind of a long answer not to say much, but I guess so far we haven't seen a dramatic impact as far as pulling a lot of people away from beef toward that. Exports, yeah, I think the kind of things that we export are not the ground beef, right? And so the kinds of things that we export don't yet have a plant-based substitute. So I think exports are probably not impacted directly for a while. It'd be into Brian's time. So.
How much more time we got, Rich?
We got about 4 minutes, I think.
Oh,
Go ahead.
didn't know I was that far ahead of schedule.
6 minutes back.
What is the improved efficiency with a new big packing plant versus one that's 35 or 40 years old? I mean, we closed down one in Texas, we closed down Emporia. There's a number of them around. The inefficiency the claim was always the inefficiency of the old plant. What factor is that playing?
Yeah, I mean, efficiency is definitely the key there. I mean, the scale and the efficiency, as far as being able to say how much more efficient, quantify how much more efficient new technology is, I wouldn't be able to do that.